Hey man, yeah. Would you like to open an account with us where you can lose 3.25% every year but have guaranteed safety? That sounds kind of terrible. Well, what if you could avoid the hassle of capital gains taxes on massive compounding returns by simply not having any? And what if we could relieve you of the burden of having to fill up all of that free time because you'll never reach financial freedom? Yeah, I'm just gonna go. That sounds like a terrible idea. And so that's just pretty much what happens when you save your money in a savings account. You just end up losing money to inflation every single year. And although your money doesn't, you don't actually lose the dollar amounts, it'll stay the same because remember, it's FDIC insured, guaranteed, gonna stay the same. But you lose that money to inflation. And what is the difference really if you lose physical dollars versus lose the buying power of those dollars? Now, when you have that money in a savings account, it doesn't compound, it doesn't grow in any appreciable way. Even if you have your money in one of those higher interest, like online savings accounts, you still basically are at a wash for inflation on a good day. Now, let's take, for example, if you have 10 grand saved in the bank, you've scraped together $10,000 and you're like, I'm just going to keep that safe. Like, I can't risk it on anything. I can't risk it in the markets. I can't risk it on real estate. I need that 10 grand. Every year, you're going to be losing about $325 in buying power with that $10,000, given the average, 3.25% or so interest per year. Now that is almost $30 a month that is essentially evaporating out of your account like a bucket with a slow leak in it. Now, if you 10 times that and you say you've got $100,000 and that could really be doing some work for you in the markets, you are now losing $3,250 a year into inflation. It's just floating off, and that's $270 a month. That's a big amount to be losing to inflation every month. So my point is that savings in a savings account is an FDIC insured guaranteed loss on your money.
Hey, if you want me to take a dump in a box and mark it guaranteed, I will. I got spare time.
You can, literally take that to the bank. That sense of security is 100% false. It feels good. Saving your money in a savings account has a 100% risk of losing money. And there is almost no other investment out there that has a 100% loss risk, or it wouldn't exist. They just sell you this FDIC insurance, everything sounds good, put your money in the bank, and it's going nowhere. And it's been drilled into your head by pretty much everyone from a very early age to save your money, save, 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 save. No one ever tells you really, go out and invest that money, make it grow for you. Make that money work for you. Because savings will never get you ahead. Pretty much anyone with any job that's a reasonable job, saving money is not going to get you ahead. The only way that you could get ahead with savings is if you already make just a ton of money, like Jeff Bezos or an Elon Musk, and now they can save the massive amount of money that they made from investing in themselves and in their companies. But people that have a dollar per hour attached to their wages or just a typical salary, even up to $300,000-$400,000 a year, you are not going to be able to save your way to success versus your lifestyle. And the reason is because saved money is idle. It's just dead. It's laying around doing nothing like a high school senior. It's not earning you any money. And that is the key to getting ahead, is that your money earns you money while you sleep, while you're out playing, or while you're out working to make more money. So even if you do have one of those jobs that's an X amount of dollars per hour, you can still do that. You can collect your health care benefits, and you can have that money working for you on the side while you're working. So you're just compounding the amount of money that you are able to earn and have your money earned for you. When I say that you can't get ahead by saving your money, what do you have to do instead? You need to invest it and get it working for you. A lot of people are fearful of investing. It has been drilled into them that stocks, real estate, businesses, anything else are too risky. I can't tell you how many times people have told me that investing in real estate is really risky and that I would, lose my butt, that the tenants would trash the place, that I wouldn't have rent paid, that I would get foreclosed on by the bank. Anyone Anywhere, if you're looking to get into real estate and you've never done it before, people will tell you that you will fail. They're scared of it. The same thing with a lot of folks in the stock market, especially people of my age, somewhere probably between late 20s and late 30s, who went through the Great Recession. And, everyone before that pretty much had a lot of good times. 80s and 90s were pretty good times, and then you hit the 2000s. We had the stock market meltdown, we had the housing bubble crash, we had the credit bubble explode, and so that made people very fearful of stocks, ignoring the historic trend for the market to go up over time, all the time, essentially forever, with blips and crashes and corrections and bear markets along the way. But that has made people very fearful of stocks, and people will think that they will lose their money in stocks versus keeping it in that savings account that is guaranteed to lose money. So let's look at a couple of these items to invest in instead of keeping your money in that savings account and watching the value of it evaporate over time. The first one that is pretty easy for everyone to get into, and it's something I talk about a lot on this channel, is just investing in stocks, index funds, ETFs, etc. If you invest in a broad-based index fund like a total market fund or an S&P 500 fund or something like that, it is very cheap, it is very easy to get into, and historically it's essentially guaranteed to go up over time because these companies, they compete with each other, there's continued innovation, the value of the companies and the market as a whole will continue to go up over time. Even investing in things like stocks, individual stocks, there are some just blue chip companies out there that are almost guaranteed to go up or produce a solid dividend over time. I mean, you can look at like Amazon, Google, P&G, AT&T. These provide services and things that are likely not going to go away in the near future and have pretty mature business models that you can count on to continue to pump out money. Another thing that I like to invest in is real estate. And this is a classic wealth building strategy, but it does require more time, more money, and more management than investing in stocks or ETFs. You're going to need a lot of money up front for down payments. Things take a lot of time to happen, such as like finding which one you want to buy, closing on it, getting it rented or flipping it, and then finding a buyer, closing on that. It takes a lot of time and money. The results don't compound either. So like, when you have your stocks, when you get 10% one year, the next year it goes up another 10%. That compounds on that first 10% plus the dividends that it throws off, and that compounds. Rents don't compound. You just get the set amount every month, essentially forever. You can raise it, but they really don't compound. But you do get other streams of income off of these rental investments. You get note pay down as you pay off your mortgage from the rents that you have collected. You get appreciation on the building. You get tax deductions in preferential treatment for being a real estate investor come tax time. And then at the end, the sale of the building, if you want to do that, if you bought low and it's now worth more, you can usually make a bunch of money there, plus get back all of your down payment money. And then it will only be taxed at whatever your long-term capital gain rate is if you keep it over a year long. Now, what I like to do is I take my rental proceeds, because I'm in the rental real estate business. I take my rental proceeds and I invest that into index funds. So what I am doing is I am taking semi-passive income from my real estate investments. I'm investing that into index funds, and then I am making compounding passive income off of semi-passive income, which is just a super powerful way to grow your wealth in an exponential fashion. Third, you can always look at either starting or investing in a business. Now, this is going to take probably the most amount of time and energy and potentially money to get going, especially if you are the person starting the business. Now, you may know someone that has a great business idea but doesn't have the capital, and you can invest in their business as an investor for them, which sort of puts you, it's sort of like investing in stocks, really, because you're buying ownership in this company. But they may want more money than you would put in stocks or just some other thing. But starting a business probably has the most risk out of these three items that we've talked about, but it's still less risky than 100%. But business has the potential for unlimited upside. These are, your Amazons, your Teslas, Google, Disney, things that just have started from nothing and now have grown to be multi-billion-dollar corporations and household names. But this could also be your local plumber, your local HVAC guy, your local lawn care guy that just has a great idea and is willing to put the work in, can scale their business so that they can, make money and have the, other people work for them and scale up to be a small to large size business. In any case, any one of these three items is going to be less risky and have far larger returns than any savings account will ever provide. Now, is that to say that savings accounts are totally useless? No, that's not the case at all. It's just not the place where you want to store your entire life savings. What they are good for is holding money that you are going to need in the very near term, like 1 to 2 years, and you know that you're going to need a fixed amount for something. One of the biggest things for folks is their emergency fund. Now, this is usually between like 3 and 12 months of living expenses that they have banked in case something would happen, like the government shuts down the entire economy, or they just lose their job otherwise. And what that entails can be different for everyone, because some people might say they need 3 months of what they're spending right now. Other people might say, well, I can cancel everything other than my mortgage payment, and that is the amount that I need. Some people are more comfortable with 3 months. Some people are more comfortable with 12 months. I'm sure there's people out there with 2 or 3 years of money banked into their emergency fund. It's also good for anything, like I said, that you're going to need in the next 1 to 2 years. For example, like the down payment on a home. If you are saving up for the down payment on a home, I would hate for you to put that money into a bull market and then all of a sudden it crashes 20 or 30% and you think that the home you're going to buy next month you're set to buy, and now you have 20 or 30% less money in that account. You need that money right now, and the savings account is a good place for that to be stored. So guys, get out there and make some investments with some money that you have, maybe in a savings account, just some dead money sitting around idle like a freeloader. If you like this video, please give me a thumbs up. That really helps me out in the YouTube algorithm. If you haven't subscribed yet, be sure to subscribe to grow your wealth, increase your success, put you on the road to financial freedom. I appreciate you guys watching today, and I'll see you in the next one.